Hey, what's going on, everybody? This is Tyrone back with Tech Life. This article comes to you guys from simplywall.st. I'll leave a link to it in the description so you guys could check it out. So, the market is shifting very quickly. We're heading towards the end of the year, 2025, going into 2026, and the market is shifting very quickly. And I'll be very honest, there's a lot of fear around T Mobile right now. That's why you guys have kind of seen the stock going in a roller coaster, going up, going down. It's significantly down again. And just a quick disclaimer, I'm no financial expert, no stock expert, so don't go and buy, sell, trade any of your stock based on this discussion today in this video and my opinion. So T-Mobile just had a 15% drop as of recent in its stock. And there is news of a 5G expansion. We got that from T-Mobile themselves. They're looking to expand the network at a breakneck pace, if you will. Excuse me. And they will continue on that journey through 2026 and 2027. And by 2027, maybe even going into 28, they're going to be on par with anything natively that AT&T and Verizon possess today. That's the path T-Mobile is on. And that means a lot more success for T-Mobile. But why is there fear in the market? Why has the stock dropped to the levels that it's at today? And I'll say it's a competitive nature. And knowing that T-Mobile is the growth leader, T-Mobile will have to react and exceed. Meaning, currently, as it stands promotionally, per some of the news that came out today, T-Mobile's the most aggressive around anything Black Friday, Cyber Monday. They're spending the most. Promotionally active, heavy investments. If you want a good deal right now or the best deal possible, you go to T-Mobile. That's what's being broadcasted today in the news. That means spending, right? A lot of spending, high acquisition costs, which many now perceive to be normal. But going into 26, when Verizon does what they do, whatever they're going to do, we have to sit back and analyze, because the fear is that T-Mobile will respond to whatever Verizon does and T-Mobile exceeds, because remember T-Mobile's the growth leader. So they can't allow Verizon to all of a sudden flip the script and they grow the most. So whatever Verizon implements, T-Mobile's going to have to be right there, either match it or exceed it, especially if port outs start favoring Verizon. So that's what we have to look at. But as it stands currently, with the 5G expansion, all the new partnerships, and with the current model for free cash flow, so according to analyst forecasts, the expected free cash flow for T-Mobile by 2029 is 24.1 billion. For T-Mobile to even allow that type of free cash flow, in my opinion, would be a mistake. They need to, yes, forecast a higher free cash flow, but in my opinion, they can't allow it to get to 24 billion, because they need to take some of that money and put it back into the business, regardless of where it's put. If they up capex, if they spend more dividend, more buybacks, whatever the case, they need to bring free cash flow to around, or guide 2019, 2021 billion or whatever, and the rest they need to put back in the business. Maybe give us a higher permanent capex, capital, 12, 13 billion, 11 to 12 billion, up that a little bit, and put money towards fiber, building that out. They got to do it. In the eyes of the analysts, the shareholders, the media, T-Mobile is behind on fiber, and that's just a fact. But T-Mobile is in a position of strength to be able to do something about it. And as these years go on, once they close the wireless network gap, which is coming, it's inevitable, it's coming. They're going to be on par. Then they move to that next phase. Now the balance sheet is much stronger going into 26, 27, 28. Now you shift some of that capital, as we discussed previously, and you move that into fiber, or you build more wireless, you add capital to for FWA purposes. It puts T-Mobile in a flexible position. But the fear in the market today is that it's going to hurt margins. That T-Mobile has to either match or exceed whatever competitive response they get from the market, which is going to hurt its margins. Maybe its free cash flow. That's the fear today. That is just the bottom line. That's the fear in the market, that T-Mobile gets hit with competitive responses and they have to respond back and exceed, which could in return hurt its ARPA, ARPU, and everything across the board. It's possible. That's what competition does. At the end of the day, that's good for the consumer. Could very likely start a price war and bring price down. Verizon recently is doing some crazy retention offers. Their motto, grow through retention, and they're acting on it. And that's going to shrink the switching pool. It's going to shrink the switching pool. So there's going to be less people to switch over. If there's nobody in the switching pool, you can't switch, right? You can't get as many people as you usually do. So T-Mobile is going to have to put offers in the market that's going to create switching. And that's the fear of the market today. So let me know your thoughts on this in the comments. Again, the market is shifting every day very quickly. So we'll talk about that more through the rest of this month going into 26. So stay tuned for more. Like, share, subscribe if you're new. I'll see y'all in the next one.